Good day everyone, how are you guys today? Today with the help of this video I'm gonna show you what it's like to invest in shares and how does a share market work. This video is oversimplified for the purpose of understanding of the beginners. So if you're not a beginner, I'll be posting more content and more details explaining about shares and share market. So guys, please like and subscribe for my upcoming content. Let's begin with the shares. What is a share? In simple terms, a share is a unit of ownership. When you buy a share, you become a part owner of a company. To know what is a part owner, there's a lot of detail to it. I'll be posting a separate video on it. So for the sake of this video, let's just say once you buy a share, you become the part owner. Alright, here we have a company named XYZ with its shares trading for $10 in the share market. Before we start investing, I want to give you guys a brief overview of when you should start investing. You have your savings account, and then your investments account should be separate from your savings account. You should have your regular income, and in your savings account you should have at least enough money to live for 3 months or more. The more the better. And your investments account should have the spare money that you're willing to lose in case things go wrong. This is the money you will be taking risks on. So let's skip ahead to the trade. So I've got $10 which I pay to become the part owner of company XYZ, as I own a single share in that company. Now the companies make yearly profits. The profits of these companies go two ways. Either it becomes the dividends or the company invests further into the assets. What does it mean by dividends? Dividends are the share of profits received by the part owners. So a management of the company decides where do they want to what they want to do with the profits. If they go with dividends, all the part owners receive a cash in their trading account, and it depends on the management how much cash they receive per share. Let's say this company paid $0.07 per share as dividends. So since you had just one share, this is your earning out of this investment. But in real life, I'll be buying at least 100 shares. That is a $1,000 investment. And my return on that investment would be $7. This is my return from the dividends. This is what I earned as dividends. But there are other ways of earning money by investing in shares. For that, we need to know how a share market works. What is a share market? Simply, a share market is a marketplace where shares are traded during the business hours. You may have also heard it as stock exchange or read it in newspaper, and it consists of mainly buyers and sellers of shares. This is a regulated place, and it is regulated by national laws. In Australia, a body called ASX does that. ASX also stands for Australian Stock Exchange. Now who decides what price to trade shares at? In share market, it changes constantly depending on forces like supply and demand. What does it mean by supply? Supply means there are more sellers of a share. This share is not popular among investors. People are getting rid of these shares, and the price goes down if there is more supply than demand. And demand is the opposite. Demand means there's a popular stock that people want to buy and they don't want to sell. What this leads to price going up. Let me give you a real life example of how this works. So you wake up one day, you read the newspaper, your company you invested in XYZ buys another company called ABC. What's this gonna lead to? Well, this is gonna lead to a lot of things. Some investors are gonna think that this company XYZ will be beneficial in the future, so they start accumulating its shares. They invest more in shares, which means the demand goes up, and which means the price of share goes up. Initially it was trading at $10, and now let's say the share price goes up to $13. What what just happened here is called share price growth. Let me give you a real life example, a much more realistic example. Have a look at this graph. This is a share price of an actual company listed on ASX. In January, its shares were trading for $32, somewhere around $32. And by the end of the year, it went all the way up, somewhere in between 40 and 45, let's say $42. And let's say you invested in January in this company, you bought 100 shares, your investment was $3,200. And by the end of the year, your investment of $3,200 went up to, it was valued at $4,200. And if you decide to sell it at this point, you've got yourself $1,000 profit by the end of the year, just by being smart about your money and investing in the right company. Again, this happened through share price growth. Have a look at this graph. They were lows and they were highs, but the point is you have to sit through them and wait for the right time to sell your share. For the last part of the video, I'm gonna give you takeaways from this video. To summarize, number one, invest only when you're ready. Please don't use your savings. Build up your savings and build up some spare money to start investing, and it should be long term. It's a long term process. This may take up to 2 years for your money to grow. And be smart, start saving now. If you're in your early 20s, this is the right time, and think about investing. And as always, thanks for watching. Please like and subscribe.